Hey folks, today is Tuesday, March the 9th, 2021. You can see right down here in my timestamp, this is a snapshot from the ending results of our trades for the day, and basically got stopped out of everything. A good percentage at a profit, good percentage at a loss, as is always the case here. And I really am just left today with my two anchor positions, and Apple still hanging in there. Today I didn't end up getting executed on everything. I've got one hold, which is Apple. I've got two losses, and then I've got four wins on the day. So, relative for this program, that's amazing. We only need 25% of our trades to work out to break even. So four out of basically six trades being closed and filled for the day, being winners, obviously was a pretty strong day. But I thought it would be a good opportunity right now to talk about this, being that it is March the 9th, 2021. It's a Tuesday here. We had a pretty big rally in the marketplace. Now, we gave a lot of that back at the end of the day, but nevertheless, it was a pretty good rally on the day. And talk about maybe how we compare to the market. Is it a fair assumption to compare the asymmetric system to the market? Is the market a good place to be? Is the market even something that we should be comparing against? And maybe talk about those results and maybe put it in a little bit better context. So we do compare against the S&P 500. We have to have a control study. If somebody says, did you do well or did you do poorly this year with your investing? I mean, that's a very relative question, right? So you have to compare it to something. We compare it to the S&P 500. That's the overall stock market. We all understand that we could take our entire life savings, go out and buy the SPY, commission free at a lot of brokers, and just leave our money parked there. And would that work for us? Would that make us money over time? Well, you know what? No guarantees, right, in life, but it always has, if you leave it long enough. So there's always that stipulation. Warren Buffett talks about this, that you shouldn't be putting any money in the marketplace that you need in the next 10 years, that it's a minimum 10-year hold period for the stock market. There's a lot of rationale around that. One of them being that even if you invested at the very worst time in the marketplace, if you were just able to hold on for another 10 years, you would probably do fine. You'd probably make money. It's very tough to find a 10-year period of time in the marketplace where if you would have held through that time frame, you wouldn't have come out ahead. But nevertheless, when we look at the market, it's not that easy, right? The market really didn't do a whole lot in the 50s. In the 60s, it started to take off. It's a little bit hard on this the logarithm here to see that, but 60s were good for the marketplace, and then we had hyperinflation and Jimmy Carter years of gas and oil rationing and all that kind of stuff in the 70s. And the 70s was a little bit tough for the marketplace, but then our savior came along in the form of Ronald Reagan, and in 1980s, oh my gosh, the market just absolutely took off. And then 1987, right there, that was not the year, that was the week. That was the week that I started my career on Wall Street. Started my career the week of the crash of 1987. And it doesn't look like a big deal now, but it was a big deal at the time. Big correction. And we had this big sell-off, right? And then the market just kind of went parabolic there in the 90s up until the tech bubble of 2000. And then we gave back 50-60% of the marketplace. We came right back, and then 2008 we had the financial crash. We gave 50-60% of it back. We came roaring back from that, and then in 2016 we gave a big percentage of that back. And of course we're way up here now, right? We're way up here, but we know what is coming next. And so, our premise is twofold. Number one, the market will make you money over time. We know that. Number two, though, it's very volatile, right? There has been many occasions here where the market's given back 50% of its gains. And I don't think anybody would want to have their life savings in something that has the potential to lose them 50%. And so our whole mantra, our whole approach is that we want to tie our results to the stock market, primarily the S&P 500, because we know that it has performed well over time, but we want to do it with alpha. and with better beta. Now, alpha simply means that we want to be able to best the S&P 500. So, if the S&P 500 makes 15% in a year and we make 20, we're happy with that. If the S&P 500 loses 10% in a year and we break even, we would be thrilled with that. We are comparing ourselves against the S&P 500. We want to beat it. And we want to do it with better beta. So better alpha, better returns with better beta, better volatility, or less volatility, I should say. We hopefully don't see 50% swings in our accounts, okay, in the AST program, the asymmetric trading system. So let's take a look at a couple of things here, and let's talk about where we're at for the month. We started off the month with about 32,582, and we went on a nice run. I say nice, tongue-in-cheek. We went on a nice run of 4 days of losses. Now, that matches our losing streak with February of last month. February of last month was an absolute gangbuster. It was an amazing month. It was probably almost a too good to be true month. I almost cringed showing the results from February because I don't want you to think that we're going to be able to knock it out of the park like that every single month. But it was an amazing month, even though we did have a losing streak of 4 in a row. We broke that on March 5th when we went to cash, and then on March 8th we had two winners along with 6 losers. A very tiny down day, $178 on the down day. It's not a bad day for what we had on the 8th, which was a big reversal day. That was the market pushing in the morning, trying to come back. So most of our trades were bullish in natures, and then they gave all of that back at the end of the day. So for a big reversal day, it really was not a bad result. And it set it up for today, March 9th, where we had a very, very nice day. Now, you'll notice here in the notes that overnight on the 8th, I did add $1,500 into my account. So you'll notice that differential there, and that has been calculated in. That's been factored in to the P&Ls here, so we won't consider that as part of the gain for the end of the month, and we'll track that. We would have been at $32,992 at the end of the day today. So, a pretty good, like a 480, 490 or so dollar gain on the day for the day today. But I wanted to drill down on it a little bit, and that's really what my focus here is. Are we on track to meet our goals? Our goals being primarily lower volatility than the market with better returns. Okay, so today is, of course, a good example of that because we had a gangbuster day today. At one point, the market was up over 2% on the day. Okay, and so the first question is, how did we perform today relative to the overall market? That's the first question. That's an easy one to answer. The market, the SPX finished at 38.75, was up 54 points, up 1.4% for the day. Our asymmetric system was up $483 on 32,992. Again, the number not counting the 1,500 that I put in. That's a 1.5% increase. Now you're like, well, 1.4 versus 1.5. That 1/10 of 1%, guys, that's 1.2% a year. Now, 1.2% a year in the stock market, that matters. That matters, okay? Let's go take a look at an example here at 1.2% a year. Here's $20,000 over 10 years, 10% rate of return, compounded monthly, adding $1,000 a month into it. That would grow to $200 and almost $59,000, right? Let's add 1.2% to that, so it would be 11.2%, right? And instead of 259, we get 280. So it's tens of thousands of dollars. Every penny counts in the stock market. Even if you're paying commissions on these trades, it's going to tremendously affect your potential to beat the market, which of course has no fees, no charges inside of it. So we outperformed. We outperformed the market today. It's a one-day window, right? But we outperformed the market. But more importantly, I wanted to show you what's happening inside of our account.